Hello everyone, do you hear my voice? Okay, let us start today's webinar. Thank you for joining today's True Trading webinar. I am excited to be here with you. My name is 𝗪𝗲𝗯𝗶𝗵 from Traders United. First, risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott Wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into Forex market trends, chart patterns, and price action strategies. So whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in Forex markets. With that, let's dive into into today's session. Okay, we got some messages. Okay, good. Okay, so these are the main topics that we're going to cover inside today's webinar. These are okay. So macroeconomic events and data releases. We're going to discuss the previous week. We're going to do the fundamental analysis. Okay, so let's start with that. The inflation expectation inside the NZD versus USD currency pair. So this is the New Zealand dollar versus United States dollar currency pair. Now, the question might come in your mind that is this good for NZD USD, indicating a stronger or weaker New Zealand dollar? I mean, after this report, what do we actually got? Well, the previous number was 2.12 and the actual number came at 2.06. So the inflation expectations, the data, it measures the anticipated rate of inflation over the next quarter. Lower than expected reading 2.06 actual versus 2.12, the previous reading suggests that inflation expectations are declining. Now, what kind of impact we got on the New Zealand dollar? Well, we got a weaker New Zealand dollar. Lower inflation expectations can reduce pressure on the Reserve Bank of New Zealand Bank and to raise interest rates or keep them high. So this could lead to a more dovish monetary policy stance, making the New Zealand dollar less attractive to investors. Let me show you a chart as well. Here it is, New Zealand dollar versus United States dollar. This is the monthly time frame. Let's just go over to the daily time frame. So here's the daily time frame. So NZDUSD currency pair, we basically expected a potential decline, and this is what we got. We got a drop in price action. Later, after a few days, market tries to rise back up, but it could still continue the rise, or it could still continue the drop as well. So based on the news, we were expecting uh, overall decline in New Zealand dollar, and this means the price action should drop, and in case it did go lower. So the overall verdict is this data is mildly bearish for the NZDUSD, as it suggests a softer inflation outlook, potentially leading to less aggressive monetary policy from the Reserve Bank of New Zealand. However, the market reaction will also depend, on broader US dollar strength, risk sentiment, and other economic indicators. The next one is the GDP, gross domestic product, related to British pound versus United States dollar. And the previous forecast, the previous number was 0.1, the forecast was 0.1, and the actual number we got is the 0.4%. Now, you might ask, is this good for British pound or not? Well, a higher than expected GDP growth is generally bullish for the currency, meaning it strengthens the Great British Pound in this case. Now let me go to a price chart. So go to the daily. Since the actual GDP came in at 0.4% compared to the forecast of 0.1%, this indicates that the UK economy performed better than expected. A stronger economy typically attracts more investors, and investments also increases. The demand for the UK currency also increases, leading to British pound appreciation against the USD. So this is strong for GBP USD, meaning the GBP is most likely going to rise as compared to the United States dollar. And this is what exactly we got over here. Market started a nice bullish trend over here, and it is not testing a resistance level over here, so it might tries to stop and reverse at this point. Okay, let's go back to the presentation. So I just discussed the previous week macroeconomic events and data releases. Okay, these were the numbers. Now let's discuss global market trends, euro dollar, euro USD, and the spot gold. The symbol for the gold is XAUUSD. Now let's take a look at euro dollar first. Go to the daily. So you can see euro dollar actually rallied up a little bit, and I will discuss more about euro dollar currency pair when we do the trade setups. But overall, I was expecting a bullish leg last week, and this is what we got. It did go up. Regarding the spot gold price action, just keep going up, up, up. It's going sideways a little bit, but overall, it's going to rise up more. So that was the expectation, and we got a nice bullish price action overall in spot gold. Okay, let's go back to the presentation. Now I'm going to week my macroeconomic events and data releases. Okay, so number one is the CPI, Consumer Price Index, and that's related to the US dollar versus Canadian dollar. Now, the Consumer Price Index, the CPI, uh, basically the consumer prices make up the largest portion of overall inflation. Inflation plays a key role in currency valuation as rising prices often prompt central banks to increase interest rates in line with their mandate to control inflation. So the change in the prices of goods and services purchased by consumers, and the usual effect is actual greater than forecast is good for currency for the USDCAD. So the CPI, the Consumer Price Index, is the most important inflation related release due to its earliness and broad scope. This is among the few non-seasonally adjusted numbers on the calendar, as it's the calculation. Okay, now the as far as the trading is concerned, why should traders care about this number? Well, the consumer prices account for a majority of overall inflation. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates out of respect for their inflation containment mandate. Next one is the Euro USD. Now, FOMC meeting minutes is directly related to USA, and the most affected trading instrument, the Forex pair, that's the Euro USD. Now, the actual financial data did not release yet. Okay, today is 18th, and that's going to be released on February 19th. Now, let's talk a little bit about what is FOMC minutes. FOMC minutes is a detailed record of the Federal Open Market Committee meeting released 3 weeks after the actual meeting. It provides insights into the discussions, economic outlook, and reasoning behind the Federal Reserve's, the Fed, monetary policy decisions. Now, the key aspects of the FOMC meetings are economic conditions, the federal of inflation, employment, and growth, policy outlook, clues about future interest rate changes, member sentiment, how hawkish or pro-rate hikes or dovish pro-rate cuts the policymakers are. Market impact is directly related to FOMC meetings. If the FOMC meeting minutes hint at future rate hikes in interest rate, the USD usually strengthens. If they suggest easing or rate cuts, the USD weakens. Now, why it's important for traders? Well, in spot forex market and even in spot gold and commodity market, a hawkish tone boosts US dollar and a dovish tone weakens United States dollar. And if they do a rate hike, the fear of rate hike basically push the spot gold lower, and rate cut expectations push it higher. Let's take a scenario as well. For example, we get hawkish FOMC minutes, meaning tighter policy. So Fed signals higher rates for longer. So it means US dollar is going to strengthen. Okay. And what we can do is we can buy the US dollar pairs like the USDJPY and USDCAD. And we look for sell trade opportunities in spot gold. Now, the opposite side is if we get a dovish FOMC meeting minutes, meaning the easing policy, and Fed hints at rate cuts sooner, then it's going to weaken the United States dollar. For the trading point of view, you should sell the US dollar pairs like, you buy the euro dollar and euro dollar goes up. So it means if euro dollar is moving up, it means the United States dollar is becoming weak, the euro is becoming strong. Same goes with the British pound versus United States dollar, and you could also look for buy trading opportunities as well in spot gold. Okay, so let's start with the global market trends for the current week. I'm going to start with the uh, US dollar versus Canadian dollar. Then I will also cover the US dollar versus Swiss franc. Okay. Okay, give me a second. Okay. Okay, USDCAD. Okay, we have the USDCAD over here. So I'm going to start the analysis from higher time frame, working my way down to the lower time frames. Okay. So right now you can see we got a triple top type scenario over here inside USDCAD monthly time frame. So it's a nice strong resistance, and market is trying to drop over here in USDCAD monthly time frame. Now let's take a look at a weekly time frame. Same story, price action is falling down. And if you check out the daily time frame, let me remove all of this. If you go over to a daily chart, you can see we got a nice breakdown below the support level. So price action is probably going to retest this broken support, which is probably going to act as a resistance. Let me change the color of this one to red. Okay, so price action is probably going to rise up inside USDCAD currency pair daily time frame, and then it's going to print a top and probably going to resume the decline. Okay, next one is the US dollar versus Swiss franc. Here it is. Well, it looks sideways overall, I would say. Why sideways? Let's zoom in a little bit. You can see we're getting kind of a sideways price action over here. So overall, it's quite possible that USD CHF is probably going to drop. If you take a look at weekly time frame, you can notice that price action is trying to move inside a trading range over here. Next, let's take a look at daily. Even in daily time frame, if I remove all of this and we draw a simple support level, here it is, and zoom in a little bit, you can notice that we only got just one candlestick close down over here. This is the support. Here's the arrow, blue arrow. So that's the support. We got a spike over here. This candle actually left a tail below the support area. Let me unselect all of this. Okay. Let me change the color of arrow. Okay, so this red arrow right over here, right at the support area. And so far, market tested the support over here one time over here. Here's the second time. and right now it's retesting it over here. So it's possible that we could get a bullish leg from this level, okay, or market is going to drop from current levels. That's also possible. Let me change the color to green. So this means if market is going to resume the uptrend, then obviously we're going to get a bullish candlestick close above 0.9048 level. Otherwise, it's just going to turn around and then starts the fall. For example, we have another support down over here. So if market breaks this level, 0.8910 level, then price action is probably going to drop more. Okay, let's go back. Okay, next one is the Euro, USD, and Australian dollar. Well, I'm going to discuss both of these pairs in much more detail. So let's go start with the euro dollar. Okay, euro dollar is overall going sideways, I would say, but if you check out the monthly, it's trying to find some buyers over here. So this was the bullish leg. That's what we got here. We got this bullish leg, and after that, we got the top over here back in year 2023, and then a lethargic drop in price action. Price action is trying to stabilize, it's probably trying to rise back up, and we might get some more upside over here in euro dollar. We will see how it goes. Next one is the Australian dollar. Aussie dollar is also trying to find support over here. We got this break over here, another one over here, probably a false breakout to the downside. If I go over to a weekly time frame, you can see it took out this low over here, and then it's trying to rise back up. This whole thing could fail and price action could fall much lower. Okay, let me discuss some of the trade setups. So I'm going to look at euro dollar currency pair, and I'm going to specifically talk about some price levels, some key support and resistance levels, along with a trade idea and stop loss. Okay, so the potential trade setup and trade idea for the euro dollar. Well, euro USD has been moving sideways for a few days, but has just reached near to the old swing high this week right over here, signaling some potential bullish momentum. The market may be reacting to weaker than expected US data or a shift in market sentiment away from the US dollar. The key price levels are, let's take a look at the support area. This is present at 1.0211 down over here where I'm pointing my cursor, with resistance now 1.0533, which is basically the old swing high. Okay. Now a breakout above 1.0533 could open the door for further gains, while 1.0277 remains an important level to watch for any pullbacks. Now the entry idea is look for a bullish breakout above 1.0533 for a long position, with the next target around 1.08 24 right up here. Alternatively, if there is a pullback to 1.0277, consider buying near support with a risk to reward setup. Now for the stop loss consideration, place stop loss just below 1.0211 price level for long positions to limit risk if the price reverses. This helps um, protect your trading capital by minimizing potential losses in case the market moves against your trade. Now, regarding the catalyst or risk, the trade could be invalidated if there is sudden risk on sentiment or positive US economic news, especially if the US dollar strengthens unexpectedly. Since the Euro USD involves the US dollar, any changes in Fed policy affect the pair. A stronger US dollar due to rate hike or positive US data pushes the euro dollar down. It's probably going to fall, okay? While a weaker US dollar lifts the pair, for buyers, price action should not hit 1.0211 support level down over here. If it hits it, then we stop looking for any type of buy trades. Okay, the second setup is about the Australian dollar AUD USD currency pair. Now the Australian dollar has been moving sideways for a few days, but has just printed a new high this week. It took out the old swing high right over here as well on a closing basis. So it is signaling some potential bullish momentum. This whole thing could turn into some kind of a false breakout as well. It's also possible that this is just a false breakout and price action is going to drop. Okay, so this is also possible that market is just trying to dodge and just trying to fool traders, and overall just a false break to the upside, and then it's probably going to drop more. So I'm also going to discuss how you can play this thing, how you can trade the market. Okay. Now the key support levels we have is present at 0.6087 all the way down over here. That's our key support level. And the resistance is now present at 0.6382, which is basically the old swing high over here. A breakout above 0.6382 obviously is going to open the door for further gains, while the 0.6231 remains an important level to watch for any pullbacks. Now the entry idea is look for a bullish breakout above 0.6382 for a long position with the next target around 0.6549 right up there. Okay. Alternatively, if there is a pullback to 0.6231, consider buying near support with a risk to reward setup. Stop loss concentration is, it's important. So always trade the market with a stop loss. So you need to place stop loss just below 0.6087 area for long positions to limit risk if the price reverses. And this helps protect your trading capital by minimizing potential losses in case the market moves against your trade. Catalysts or risk, the trade could be invalidated if there is sudden risk on sentiment or positive US economic news, especially if the US dollar strengthens unexpectedly. Since the Australian dollar versus US dollar involves the United States dollar, so any changes in Fed policy affect the pair. A stronger US dollar due to the rate hike or positive US data pushes the AUD-USD lower, while a weaker US dollar lifts the pair. For buyers, price action should not hit the 0.6087 support area. Okay, so that's the analysis. Let me know if you have any questions. If you have any questions, feel free to type inside the chat box and I will be happy to answer it. Okay, so let me cover what we have learned today. I've discussed about the CPI, the Consumer Price Index, inside the USDCAD, the FOMC meeting minutes discussed related to United States dollar, and I talked about the euro dollar as well, and euro dollar, Australian dollar versus US dollar, USDCAD, and USD Swiss franc are the assets to watch out for profits. And I specifically discussed about the euro dollar and Australian dollar trade setups. Okay, so what you should do next? Well, stay tuned for the schedule of next week's trading webinar. Okay, you can subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. And if you want to learn more about trading, just visit the Trade Geek, access free trading courses for beginners, intermediate, and expert traders. So I would like to say thank you for hanging around and see you at the next trading webinar. The next webinar is going to be on Tuesday, February 25th, 2025. So that's the date and the time is 12 p.m. UTC. Okay, that's the end of today's presentation from my side. Have a nice day and bye-bye.